right, everyone, this is Vishal from Equity Guru, and welcome to Chart Attack, where we look at some of the best technical charts out there in the markets. This one is going to be a broader one. We're going to be looking at three of the most important charts to be looking at if you are a stock market trader right now. The markets had quite the volatile week last week, the ups and downs, and they occurred at major support levels. We were literally one close away from basically breaking down and ending the uptrend, not necessarily here on the S&P 500, but definitely on the NASDAQ. I mean, take a look at the price action there on the 10th of January, and then on Friday on the 14th, we ended up closing above our trend lines and our support. And we hope from here we get our bounce. But is this the opportunity to buy the dip, or are we going to be breaking down? And that is the million-dollar question that a lot of people are asking. And I think there are three charts here to follow to determine whether we're going to be continuing higher or if we are going to break down. So exhibit one, the first chart, which I think you should be paying close attention to, is the chart here of oil. And oil sort of going under the radar here because I think a lot of people are focused on buying the dips on the markets, but we're looking to break above the highs of 2020, higher oil prices. And if I zoom out to the longer term charts, folks, if we break out here, we're seeing $90 plus oil. And then after that, we're probably going to go over $100 oil. And I think a lot more people will be talking about it when that happens, because of course it's going to impact inflation, food prices and travel prices for transportation will be going up. Usually when oil moves higher, we see a bid in the bank stocks and we see a bid in energy, obviously. And those two sectors tend to help to drive the equity markets higher. We did not see that last week, except on a Friday, even though oil's been making a nice run here for a few weeks, actually. And another observation that I've seen is even with the rise in oil, there were some days where the oil commodity currencies, such as the Canadian loonie, the Russian ruble, the Norwegian krona, they were not actually following along price against the US dollar, which is getting some people a bit worried because maybe there's a geopolitical event that people are pricing in, potentially something to do with Russia. I know there's talks with Russia supposedly supposed to happen, or this is just an inflation trade. Right? People are running into oil because it is a commodity and because inflation came out higher last week. A lot of people are worried about this. So keep an eye out here on oil. Usually higher oil prices is good for the equity markets in general because it drives up banks and energy. But definitely keep an eye on it, especially if we factor in the inflation stuff, which of course is going to get impacted no matter what if we make a breakout here. So oil on the verge of a breakout. Let's see if we see that this week or instead we pull back lower. And then two more charts here. And I think the most important one is the 10-year yield. And a lot of people have been watching this chart. And wow, the markets are closed today. US markets are closed for Martin Luther King Day, but the bond markets are open. And we are seeing unbelievable price action here now. Yields, dropped down to 1.70%. and are now spiking higher. We are at 1.8%. And if you believe these markets, the stock markets are propped up because of cheap money, higher yields is not really going to bode well for equity markets, right? This is basically pricing in multiple rate hikes now. We know one is definitely coming for March, in March, because I was taking a look at the Fed futures and there was like a 97% possibility or probability that the Fed will hike in March. So I think that one hike is already priced into the markets. Now it's about 3 or 4 rate hikes this year. And if the 10-year yield here keeps climbing higher, folks, if we get to 2%, say, I think the market is then realizing, oh crap, the Fed is going to be hiking rates here much more than just one, and not going to bode well for stocks that are propped up on cheap money. And even Cathie Wood, believe it or not, is now looking at the deflation trade because she thinks yields are going to go higher. So watch this 10-year yield technically playing out just as we expect with that retest and that big buys on Friday and the continuation. So looking at this, it looks like yields are going to be going higher, folks, and that might not bode well with the markets. We might be getting that breakdown, but of course, let's wait to see what happens on the daily closes of the equity markets once they resume trading for the week. And then the final chart here is the US dollar chart, which impacts basically a whole bunch of markets, including stock markets, but will also impact commodities, precious metals, even the cryptos, in my opinion. And the dollar, I'm on the weekly chart here. We had a breakout above 93. I know a lot of the dollar milkshake theory guys, the Brent Johnson guys, the dollar bulls were saying, okay, this is that beginning of that run into the dollar. For 7 weeks, the dollar did nothing, but we did break down last week, and now we have actually pulled back to retest this 94 sort of 50 zone, which is a major support zone, also where my moving average meets current price. So are we going to break down, or do we see a resumption of the dollar bull market? And if we do see, the resumption of the dollar bull market, it probably is markets and traders expecting more rate hikes, so a hawkish Fed, which again would be stronger for the US dollar, or completely opposite, this is money running into the dollar for safety, which again doesn't really bode well for stocks. And traditionally, stocks tend to do well when the dollar is weakening. So 3 charts here to definitely keep on your radar: oil, bonds, and dollar. If I was going to pick, I think the most important one would be that one, the chart of the 10-year yield of the bond market, because that is sort of telling us where interest rates are likely going to go. So keep an eye out on that. And, at time of recording, it's not looking too great right now, but the US markets are closed because of a holiday. So we're going to have to see if markets can hold that major support, and the NASDAQ and the Russell 2000 are the 2 charts that I'm watching very, very closely. But that's it for me, folks. I know this one was a bit of a longer one, but really important charts here to keep an eye out for to determine whether markets are going to be going higher from the major support, or if we're going to be breaking down, which brings into question the end of the uptrend. I want to hear what you guys think. Do you think this is the top of the equity markets, or do you think this is going to be an epic buy the dip opportunity? Let me know in the comments below. Be sure to follow us on all our social media links, which are provided in the description box below. And I will catch you all in the next chart attack video.